Hold on to your seats, folks. Ford CEO Jim Farley just dropped a bombshell announcement that has sent shockwaves throughout the entire automotive industry. After facing a slew of recall issues over the past year, the automaker is now projected to lose a whopping $3 billion on electric vehicles in 2023. That's right, $3 billion. Many are left wondering what could have gone so wrong. If you're a Ford fan, don't kill the messenger, and let us tell you what this means for the future of Ford in the EV market. This is Jim Farley, the famed CEO of Ford, who has been topping the headlines since the recent investor meeting over at Ford. He was brave enough to break down Ford's business into 3 categories, and while 2 categories did exceptionally well, the EV side of the business was lacking. Breaking bad news is never a CEO's favorite thing to do. But Farley has given us a peek under the hood of Ford's EV business, and the figures are not for the faint of heart. The automaker is projected to face a whopping $3 billion loss in 2023 alone. To put that into perspective, that's equivalent to the combined losses the company faced over the last 2 years. Ouch! But don't worry. Ford CFO John Lawler assures us that this expected loss is just a bump in the road for the automaker's EV startup. The Model E is still in its early stages, and the company is investing in capability, developing knowledge, building volume, and gaining share, all of which come at a hefty cost. While this loss and the overall profit do not include expenses from interest and taxes, Ford expects to start making money from its EV operations soon. In fact, the specific models in Ford's EV lineup that are actually contributing to the projected loss are the Model E and the Ford Mustang. In 2022, the Model E electric vehicle business lost $2.1 billion, and from 2021 to 2023, it lost $6 billion as it ramped up production. In Q1 2023, the Model E EV unit posted a $722 million loss. Additionally, Ford said it'll lose $3 billion more on its sales of electric vehicles to consumers this year, but it still expects to hit the profit targets. However, Ford is also investing in new technology and increasing production of its popular EVs, such as the Mustang Mach-E, F-150 Lightning, and E-Transit, in response to strong consumer demand. While there's no specific information on any Ford EV models that are currently contributing to profits, the company has the plan to turn a profit on EVs in under 4 years. And the Model E is expected to reach profitability before taxes by late 2026 with an 8% pre-tax profit margin. While the company is projected to lose $3 billion from EV sales to consumers this year, it's not all doom and gloom. In fact, Ford aims to shed light on its electric vehicle transition and offer revised financial results that will showcase how the business units would have performed in 2021 and 2022. And that's not all. Ford has established 5 new business units, each focusing on growth and innovation. These units include Ford Blue, which will focus on the company's traditional combustion engines, and Model E, which will be dedicated to electric vehicles. Ford is also creating a new unit called Ford Pro that will cater to commercial and government fleets. Ford Next will be focused on developing cutting-edge technologies and exploring non-automotive mobility solutions. With these ambitious plans, Ford aims to increase the global production rate of EVs to 2 million units annually by the end of 2026. And while profitability remains a significant challenge for most traditional automakers, Ford is confident that it can achieve an 8% pre-tax profit margin from EVs by the end of 2026, thanks to its increased production and a team of talented Tesla alumni that Ford has hired. Sure, Tesla is still the only company expected to generate substantial profits from electric vehicles in the near future. Still, Ford's success in this arena will depend heavily on its ability to narrow the gap with Tesla's profitability while also navigating supply chain issues and other market challenges that have plagued the auto industry in recent years. But with its new reporting structure and innovative business units, Ford is poised to make some significant changes and take the EV market by storm. Ford is making some bold moves in the EV market, and while the company is currently investing and losing money at the same time, they are sure to become profitable on the EV lineup soon. The creation of Ford Credit, a financial services subsidiary, is just one example of how Ford's executive team is thinking and operating. They understand that electric vehicles are not yet profitable, and there is a long road ahead before they can be. But instead of waiting for the future to arrive, Ford is taking action now to secure its place as a leader in the industry. The creation of these new business units is not just about disclosing financial information. It's a strategic move that reflects Ford's determination to win. As Farley said, the changes are significant. This is about winning 100%. By separating its business units and focusing on innovation and growth, Ford is positioning itself to lead the charge in the future of transportation. The company is not afraid to reimagine its future and form its own path that's different from other companies. With this bold move, Ford is setting itself up for success and paving the way for a brighter future in the automotive industry. And while CFO John Lawler spoke to TechCrunch that this is not merely an accounting exercise, the numbers do provide fresh insight into the company's financial standing. If we just did business as usual, I think what we felt is that the company wouldn't change enough. The dynamics within the company wouldn't have changed, Lawler said in a recent interview explaining the decision to restructure. It's about focus, it's about speed and accountability, and I don't think we would see the clock speed increasing. Ford's restructuring efforts have caught the attention of Wall Street, but analysts are playing a cautious game of wait and see. While the stock has received a hold rating with a price target of $13.50, its current trading price of around $11.70 per share suggests that investors are not yet sold on the new business structure. When the new business units were announced, the stock surged, indicating that investors were initially optimistic about the changes. However, the stock has since plummeted due to market fluctuations, supply chain issues, and lackluster quarterly earnings. Despite these challenges, Ford remains optimistic about its future. The company is set to report its first quarter results under the new business structure on May 2nd, and investors will be watching closely to see how the changes are impacting the bottom line. In addition, Ford will host a Capital Markets Day on May 22nd, during which the company will provide a detailed update on its plans for the future. This event will be a crucial opportunity for Ford to showcase its progress and convince investors that the new business structure is the right move for the company. The company has also received some positive news in the form of financial projections. Deutsche Bank's estimate that Ford's traditional business, Ford Blue, could show an impressive EBIT margin of 7.3% for 2022 is encouraging. This figure is expected to more than offset the losses incurred by the company's EV operations in the previous year. The positive outlook has been echoed by Morgan Stanley's Adam Jonas, who believes that Ford's internal combustion engine business is currently generating ample cash flow to fund the more capital-intensive electric vehicle business. While these projections are promising, the most critical question remains: how long can Ford keep this up? Only time will tell, but with their ambitious goals and innovative business units, we're all hoping that Ford turns a profit soon. Plus, with the upcoming development of the Dark Horse, you can tell that it'll turn a crazy profit and help Ford pay off its debt. So, are you planning to buy a Ford EV in the future? Or will you be going for its competitors? Be sure to let us know in the comments section below. And thanks for watching.